All right, traders, it is the 5th of July, 2017. My name is Jameson. We're looking at a 4-hour candlestick chart of the natural gas spot prices. We can see that, let's see here, contract. This is the continuous contract, so this is the continuous volume profile for the contract. We have rejected the point of control. We've lost the low value area low. A pretty good probability that we trade back into it. We can see very clearly here that we rally higher, we rally again on this retest, on this retest here. You can see there's no demand, and then we start to see some supply. This final little retest right here, no buyers. Breakdown on supply, large supply. The breakdown and the loss, the breakdown and the emergence of supply results in a lower low. You see how we lose that level of support that's there. There's our sign of weakness. Supply comes in, we lose this level, sign of weakness. We rally higher. Pretty big effort there. Despite the big effort, we don't regain this level of support, so we're confirming resistance. We gap down, trade higher. Again, no volume, no buyers. We have this nice big upper wick. We have selling that's present. Break down, we rally higher. Again, no buyers, and then we break down today. So there's a supply. We wash out lows. But what's significant about this is bearish. But if we look at the cumulative delta, we actually have a bullish divergence. So you can see here that we actually have a low, and then here we have a new low, but on the cumulative delta, it's actually a higher low. So I think that presents or suggests that maybe there is some buyers, some bullish absorption that was happening at lows. And I'll show you here in a footprint chart where there's actually a buying imbalance. And that's why I had stated this is a good place to go ahead and buy UGAS and just stop out at lows, because I think this just stopped out a lot of long traders. People speculate long positions, they put their stop losses here, they washed them out to close it out, provide some liquidity, and then we just kind of bounce back and natural gas just stays sideways. But the fact that we didn't have a lower low in the cumulative delta suggests that it might not be a bad idea to go long short term and see if you can swing a 10% trade to the upside. Let's look at the footprint chart. Not it. Here we are here. Let's make sure on the proper contract here. Energy, natural gas. Let's go to spot, or here we'll go to August. So here we can see the little washout, right? Let's get this so we can review it. So we had the bid and the asks, right? So we have an imbalance here on the ask. So in order for buyers to come up and hit the ask, the trade happens this way. So we have people who want to buy and people who want to sell. When you come up and you hit the ask or the offer, then they're actually actively buying, and we can measure buying and selling imbalances. So buyers come up and hit the ask, and if they do so more than selling, it creates a buying imbalance. And if sellers come down and hit the bid, then that can create a selling imbalance. We can see on this breakdown here that there is just selling imbalances that presented, and that's why we had this bearish candle that is present. But now look, and this is right about where I said get long. So you can see that prices break down very climatically, and then here we start to develop a buying imbalance at lows. So we rally higher, there's still sellers push us back down, and then we have a very big buying imbalance which pushes us into a small little hammer back at lows. So I think that provides a little bit of a short-term base that may allow prices to rally back up, maybe test this demand here around 295, and then likely break back down and test this level again. But I thought that would present a decent lower risk entry for you guys, as long as we don't gap down.